Welcome to the Trading Lounge and the day ahead report. And here we're looking at the Dow Jones on a daily chart. The housing figures last night in the US were a bit softer, and it'll be the employment figures next tonight, I think, that will impact on the market as well. The wave structures that we have for the downside still have more to unfold in all markets. In the slightly bigger picture, though, we were looking at, we've always been sort of looking for a top of this particular structure. So we can count this in two ways to the upside, and we need to keep we need to keep all options on the table all the time. And the first one would be the A, the B, and then 5 waves for the C wave. Up through to here, and that would be a top there, and then we'll have a larger C wave coming down through here. The other count to the upside would be calling this up for 1 here, back for 2 here, up for 3 here, and then the wave 4 pulling back to the wave 4 of 1 lesser degree, or 38.2 retracement level from the 12.5 here, coming up through to here and back down through to here somewhere. Now, if it's so with the two counts, it can either be coming down from wave 3 to down for a wave 4 here in one particular case. The other side would be a more bearish picture, which would be down for 1 through here in a larger 5-wave sequence through here, and then a bounce off here and down through here. So you could see that in the bigger picture, the 13,000 would be the line in the sand that would create a bigger bearish picture there, which is handy to work with for like portfolio trading and so forth. As this moving down through here, you'll see that there's obviously the trend line support in that degree of structure, which would meet up with group 1 here, 100, 200, and 300, the top of 300 here. If the 13,200 became the resistance here, then we can pretty much claim at that point that would be moving down further, but would also be able to work out the wave structure if it moved down to that degree there as well. One of the bearish factors for moving down, we can look at the yields and the bonds, and they sort of suggest that we would be moving down further. The other one's the old classic Dow transports, and just really what I wanted to point out here is that we've had this move through the 5,000 here, and we've had our first retest here. These other retests as it came down here, that never failed, so it never got locked under here, but this is the first time that it's sort of locked under, retested the 5,000 and sort of secured it as its first retest of resistance there. There's likely to be others at that point there as well, just depending on the unemployment figures tonight and a few other little things that come out. The other point too, so that gives it a bearish connotation from this point here. The other point here too is that after each QE that's come out, QE1, QE2, and now QE3, there's always been a sell-off after the first two. So it's interesting to see this time around that the sell-off is coming there as well, and we kind of expected that in terms of lining up with the equinox as well, so that high there was right on the equinox there as well. Not that means a great deal, but there you go. So yeah, look, as far as we're concerned in terms of trading, we're short in the market on net short, and we'll stay that way, and we'll follow this structure to the downside. So sort of drilling into the downside here, we're looking at the Dow here, and the short from yesterday would have been, as I mentioned, the retest of the 13.5 there. Now, this move down here so far is really only in 3 waves. Now, the Dow here made new highs here above its previous correction here, but the S&P 500 didn't do that. It just didn't quite make it up there. So just bear that in mind when we go to look at that chart there. So this particular move down through here, this could be counted as the 1, the 2, the 3, the 4, and the 5, or it could be counted as the 1, the 2 to here, and this being the bottom of the third wave through here. So the third wave would be the 1, the 2, the 3, the 4, and the 5 unfolding to here. So another retest of supply into this area through here could be likely if the bounce off here, and then further down from that point there. The S&P 5, still the the Dow here. I'll just try and find, but you can see that we're getting fast moves to the downside, so that's giving it that impulse structure there. So just having a quick look for my S&P charts here. Okay, so this is what we're sort of drawing out yesterday, and also for the SPY as well. So you can see here that this high never made at that high there, but I'm still going to label that as wave 5 there, because it doesn't count very well in through here to have that completed as a wave 5 there. So we'll just see how we go with that anyway. But in the meantime, we can see that we've likely got an impulse structure to the downside, and also to understanding that, you know, this is the supporting region through here. Well, starting at the 1430, and then there's plenty of support in through here. So that's going to create support and choppy price action from these moments in down here. So we need to expect that. But there's been degrees of weakness within this market, and the first one was when we traded along up to the 1472, and we would have gone long again, but we just never got support on the 1472, and we couldn't get back into group 2 here. So that was the first bearish sign, I guess, not so much bearish, but certainly not. We couldn't go long unless we had that support, and the support on the 1450 was critical. That's blown away now. So the next level of support, we've put in the 144 here. It's the number where Gann and Fibonacci or Elliott meets, probably the only number that they actually agree on that's accurate as such. So we put that in there as part of the 72 numbers, and obviously part of the 9 series as well. So, but look, there's all support at every 10 points down through here. So we'll keep an eye on that. The European markets are moving down quite a bit more rapidly than the US markets, and certainly impulsing to the downside. The DAX would be able to see that at the 72 down here, 7,200. Checking that once we get the failed retest at the 73 there. The Australian market as well is also impulsing to the downside as well. Just having a look at the bigger picture here, because this market is very much like the FTSE as well. Just see if I've got this other chart here. Just bear with me a little bit. I've just been away for a while, and just got back late last night, so just sort of getting organised again. So in this structure to the upside as well, a little bit like the Dow as well, in terms that we're looking for, it's either a corrective rally to the upside or a larger impulse wave. The corrective rally would have this as an A wave to here, then the ABC for the B wave here, and then looking for the C wave moving up. The C wave has always got 5 waves in it, so we'd be looking at wave 1, wave 2, and then we're drawing this as the third wave through here to here, 5 waves for the third wave. And looking at this is where it becomes interesting, and also with the FTSE as well. It doesn't really line up with the US markets, but we're looking at this here as being an A wave, a B wave, and a C wave for wave 4 here, but that 4272 there would be very critical in supporting that viewpoint up there, and also this trend line coming through here as well. And the reason I'm calling this a B wave here is because, well, this move down here, it could be counted as 5 waves or a corrective wave, just depending on sort of how you view that and which market that you're looking at, the cash market or the futures market. But this move coming up through here is a very clear 3-wave structure up there, so it makes it a B wave. And so it sort of brings me back into this larger pattern here is very similar to this pattern in here as well, which was quite difficult to count as well. But final sort of conclusion is that we've got an A wave down to here, a B wave making a new high here, and then the C wave coming into here for wave 4, and then the wave 5 up there. So this B wave up here is very much like this B wave in here, and then this move coming down through to here. In this case here, it was it was higher. This is the high here of the third wave, and it hasn't really come down very much through here. This one here, this high here, this one's come down a bit further through here. So it'll be interesting to see what this pans out to be here. But either way, it's not going to make a lot of difference. Sure, we could say that that's a top in line with the US markets, yada, yada, yada. But either way, we're still going to have a 5-wave structure down through here. 5 waves in terms of wave 1 down to here, and then wave 2 back, and then wave 3 down. Or 5 waves down for the C wave. So they're both going to be the same. And they're both going to face degrees of support here. Yesterday, the Australian market didn't really, there wasn't a lot of sellers in there. It didn't trigger a lot of stops. There was sort of buying in there. It was kind of a typical Wednesday where it's softer in the morning and firmer up in the afternoon, trying to make new highs for the day. But it didn't do that. So a bit more sort of pressure today should help trigger that a little bit sort of lower there. But anyway, that's my sort of view there, keeping an open mind that we could have the top of a C wave over here or top of a third wave still to come. And the FTSE, like I mentioned, is very much similar to our market. And so I just got to leave that open there. So it's going to be tricky trading in through here for the SPY traders as such. All right, well, let's have a look at the commodities as the US dollar is retesting that 80, that critical point there. And the Swissy is sort of in line with the US dollar, so we can take that count into consideration as well. But we've reached our targets, but we don't have turning points just yet. There's no sign of a turn. Let's have a look. Okay, starting with oil here. The trend is obviously down, and it's going according to the wave count, so everything's pretty much fine. It's retesting 90. If it fails there, then we'll see it down at 88. It's pretty much that simple. The way that I've got this structured here at the moment is that down for 1, back for 2, down for, 3 to here, order here, 4 and 5 down to here. So still further to go down. There's normally we've got the first bounce from 99. The second one will come from 88. But of course, this is also going to be following stock and any sort of pressure on the dollar as well. So not a lot there. So just really let that sort of work that 90 there. And if you see it failing at that point, then you've got yourself a short there. The copper market, which is sort of more interest to the Australian resource sector there, we are looking for a wave 4 to come down, and we're looking for the wave 4 at the 38.2 retracement level, which is the 367. Last night that low was very close to the 367. So we do have that structure to the downside. I think it's still quite simplistic for a wave 4. It's okay to have simple waves for wave 2s like this, but wave 4s are normally more complex. So I think that we still just need to give this more time here as well. We don't need to rush in there. But what we were looking for this is we were looking for, we knew that it was going to get sort of softer, but we're also looking for it to sort of support as well. So we know the resistance level on the US BHP is $72. The support would be 65. The local BHP would be at 34. The resistance is there, and Fibonacci number there, but that's where the supply is as well, and we'll be looking for support to come into that shortly as well. So let's just see how this pans out. But there certainly could be more downside when we look at that in this trend channel here on the 2-hour chart. We can see that it's obviously got more to the downside there now. In saying that, the price to work with is the 372, so we'll be seeing that being retested there. And if we just take this from this point here, we've got 1, 2, 3, nice clear structure there. So we should get the 4th and the 5th wave coming down here further as well. Now, these can also be impulse waves to the downside as well, in some much larger pattern to the downside. But we'll just stay with the price and the smaller structure for the time being, because I really want to see what the dollar's going to do at the 80 mark, which we'll talk about shortly. The gold market as well, a little bit like the copper market or base metals. I mean, they're both metals, but slightly different functions. But so what we're looking for here is, that we were looking for a supporting area of around the 1740, That seems to have come in play, and we've got the sort of bounce back, and the structure for this downside as a wave 4 would be the A wave and the B wave and the C wave down through to here. And I've just taken this as the wave 3, the 4 and the 5 to here. If it fails at the 1750 here, which is the midpoint, so extremely important, so we need to give it some time at this midpoint here, and you will see in your own way in due course that it will, after about sort of 3 or 4 little swings across, it'll either be 3 swings or 5 swings across there on the intraday note. But once that occurs, you'll see that the market will either find it a support or resistance, and then you can take your position from that point there, because if this is correct, then we'll see further upside here. If not, well, then we'll see it start testing the 1730 and the 1720 to the downside. So just allow that time to breathe at that particular point there. Let's have a look at the currencies now. Okay, the US dollar. This is the sort of critical point I see for turns in the markets, and this, as you know, we've been obviously looking for the wave 3 down. We've been working through the whole wave 4 here. It's finally hit on the 80 here. I feel sort of good about that. That's retested that. Now we can work with that. The structure that we have for the little wave 4 here seems sufficient and complete within its internal structures, so that's good. But wave 4s are tricky little suckers. They can just expand sideways in time more rather than price, so to speak. But that 80 is a nice line in the sand that we can use. So in terms of expanding, what I mean is that all this structure we've been tracing up through here could just be the first leg of a structure. Then we've got another leg coming down, and then another leg coming down through here. So this is wave 4s are where double zigzags and triple zigzags and triangles occur, all the sort of messy, complicated corrective patterns that most Elliott traders would be the last type of patterns to learn to trade, but they're and to analyze, but they're certainly not structures to trade within. If you do, you really need to give them space. It's because they've got overlapping wave structures in there. But just drilling down into that a little bit further through there, as you know, we were looking at this wave 3 coming down, and we're looking at the 38.2 retracement level, which came in at the 80. So that's handy as well, isn't it? So it's nice when the ducks line up a little bit. It just gives it a bit more sort of credence at that. But what we do need to see here now is that we do have our little ABC structure up to that retracement level, and that's fine. But we don't have any evidence of any move to the downside just yet. So it's something that we anticipate. And if we do get this move to the downside, well, this is obviously going to put support in most of the other markets, isn't it? Yeah, the ECB are not really going to give up on the euro by the looks of it. They're a steady sort of conservative bunch, and they'll keep plucking away at it. So it should be interesting to see what occurs here. But just drilling into this a little bit closer here, if this, here we go through here. So what we're trying to do yesterday, and I'm fully aware that there's different ways to count this to the upside, but what I try and do in the morning report is just try and keep most corrections in terms of ABC corrections of 5, 3, 5 structures, and that way it makes it a little bit easier rather than bringing in X, Y, and Z. In fact, Elliott never used the X wave. It was something that was brought in a while later with Prector, but it's not necessary, but it does give you a bit more flexibility in counting in wave structures. But anyway, from here, this little this ABC that we were looking for here yesterday for wave, not yesterday, whenever, then we're looking for 5 waves up for the C wave of 5 waves for wave 5 of the C wave here, and we've got that there, the 1, the 2, and then we've got our third wave, which is this little guy in here, which would be the 1, 2, 3, 4, and then a little 5 wave structure within here to complete this one here. That could be the top of it there, actually, the A, the B, and the C for the 4th wave, and then another nice little 5 waves up for the wave 5 here. So it could certainly be the turning point for the currencies. Yeah, and obviously that's going to play into the commodity market as well, and in turn into the SPY and so forth as well. So what we want to see here now in terms of confirmation is that we want to see a 5-wave structure to the downside. So we want to see 1, 2, this little structure here starts. So 1, 2, 3, 4, and 5. If we get 5 waves here, then we'll get 3-wave counter trend, and then we'll get another 5. That much we can assure ourselves with, but it might just hit this this trend line through here and move up again. So if we get a, let's just draw this out here. Like I mentioned before, this whole structure that we're seeing up here may just be one leg. So we may end up with a situation where we've got 5 waves down like this. If that's the case, then we know that we're going to get 3 waves up like this, another retest somewhere up there, and then we can assure ourselves of another 5 waves down like this here to get this. But this may just give us an ABC. Now from that point there, we'd need to work out if we're just going to get those 3 waves there, then we'll get another push to the upside through here. But if this turns into 5 waves here, then we've got ourselves a larger market to the downside as well, and we'll be on track for that and a push up in the equities at that point if we get this larger 5-wave structure to the downside there. So what we can be assured of is that if we get 5 here, then we'll get this 5 here. That much we know. Beyond that is the guessing game, and that's what Elliott can be at times, a guessing game, and that's why if you're using Elliott consistently all the time, it's very difficult to make money out of the market. It's a struggle to break even and so forth. But when you start trading off price itself as support and resistance, as simple as that is, then your trading will improve, your results will improve. So bringing support and resistance, which essentially is price and working off price, it will certainly improve the Elliott wave structure. There's not many Elliott wave people that I know that can consistently take money from the markets. I only know of 2 girls actually, so there you go. Alrighty, well, that's that, and the euro would be the mirror opposite as well. So in the euro here, we'd be looking for, in the bigger picture here, just pull it out through here, not that one, that's a little bit too big, that's weekly. Here we go here. So we're looking for this wave 4 coming down through here. I know that the 127.20 here, this 272 is really important as a support area. So is the 128 there. The equal swing, the overshoot pattern, when it just doesn't stop here and just shoots straight up there, normally comes back as an equal swing within reason, and that's pretty much done that now. It's not quite there, but it's good enough. And but once again, especially on this market here, I feel that this as a 4th wave here, it's just too simplistic. It's not, I'd expect a sort of an A here, a B here, a C here, or something at least, and then a move up. So we'll see how we go. But if the 128 ever became the retested resistance through here, then we've got a top in the market here, and then this move that we'd be looking for here would have to be counted as a corrective wave to the upside and completing there. So we'll see how we go. I'll just go back into sorry to muck around a bit today. This particular structure down through here is a little bit tricky to count and being counted in different ways. We can see that there is support coming in through here, a bit like the Australian dollar sort of finding support in here as the US dollar retests that 80. So we could really have a turning point there. So in breaking that down a little bit further in this picture here, if it got back on the 29, then that would be something, wouldn't it? But you could move into it earlier than that as well, just depending on where you're coming from. So of course the first level is in this area. You can see this is all slowing structure through here. So the midpoint here, the 50 is the first point. To go long the next time would have to have the 72 as your support there. So wait for that. Don't jump the gate. So that's got to create a first high above the level and then come back and check it. Getting a small position above a 72 is the idea, and then looking for support on the 80 and adding to the position there. So it would be a little bit like this as well. If this came up through here and found support on here, didn't really do a very good job because they're supposed to really sort of hit here first and then come back. But if you got in here, small position, and that moved up there, that's fine. But if it came back down and went through the 72, then you have to exit at that point there. So you do really need a good solid sort of test, and a secondary test like this here, the Dow theory concept of the higher low, so to speak, is a good way to go, and taking out that high there, so to speak. So you've all got your own little setups that make money and those that don't. So many ways to look at the same thing. The Australian market as well is a bit the same as well in its move down. So just sort of going back to the bigger picture here, the bigger picture, I always like to use the trading levels, and this market is about the 105 here. If the 105 ever became support, well, then we'd go long from that point. We have been looking for a retracement back and been searching for that. And we thought we may have had it here, but we never got support back on the 105, so it didn't create the serious long positions. And now it's moved further down. So this is the 61.8 retracement level from this low area down through here. The most important number in all of this is the 1272 here. So even if this does move down further into the 103 area here, or this would be the important one here. If this became the resistance, then there's a bigger bearish picture unfolding at that stage there. But as it stays at the moment, then we need to take in consideration of the US dollar at this stage as well, because that's obviously going to drive the commodities as they're traded in US dollars. And of course, this is a situation here as well. The Shanghai market and the Shenzhen, the Shanghai's down at 2,000 now, which is a major trading level. So it will develop some sort of support, at least for the short term, around that particular area there, but we're not really expecting any support from the Chinese markets until the transition of government changes, because the last government are not going to start any new projects before the change of government. That would be sort of silly, and we don't even know what the new government is going to do either as well. If they're going to go into further stimulus, which I probably don't think that they would, because the US are not really doing them any favors, building up military things and extending their low interest rates and so forth, and China's losing money hand over fist, so they can play the long tail game as well, and they'll probably sort of end up just focusing on their internal social business inside their own country, so to speak, and strengthening that rather than playing fair with the rest of the world. So who knows? It's not my cup of tea, all of that. All I know is about some chart patterns and support and resistance, and that's what we're looking for at the moment. We're looking for support, but as you can see, we're certainly still into the downside, and the markets are soft. We just need to see how that the 80 is treated in the US dollar there, because that will be quite pivotal to what happens in the rest of the market. So, alrighty, well, good morning and good luck. Oh, and by the way, we'll be going into the Melbourne Expo next week, and we'll be doing 2 workshops at the Expo, and they will be on the robo method as well. There is a cost to go to the seminar. It's $25. I don't get that. If I did, I'd give it to you, but it's the Expo people that get that. But you need to book that online if you want to learn how to read volume and a little bit more about the daily robo method as such. Alrighty, well, good morning and good luck.